Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Pleased to have with me, Jack Crooks. He's the president of Black Swan Capital. Jack really understands the foreign currency markets and capital flows. It's really important to understand how this money really moves around the world. And Jack's an expert at really not only understanding it, but explaining it. So Jack's with us again today. Jack, thanks again for coming back to the ISE.
Thanks, Steve. I appreciate the opportunity, that's for sure.
Let me just give you the presenter, and we should be ready to go. So thanks again, Jack. Take it away.
Okay, great. Thank you. Just going to talk today. The title of this is actually The Dollar's Achilles Heel. It's really Achilles heels. There's really two phases to this, one intermediate term that could lead to a standard bear market in the dollar that we see, and it's a thematic view that we have as a potential. It's not our current strongest view. But we also have another view, which is really the disaster scenario for the dollar, and we'll go through that. And it's the nasty banana republic time type of view. And sadly, the shape of that potentiality, if you look hard, or actually you don't need to look too hard, you can see that shaping up given the way the U.S. government has abused its financial position around the world, and we'll get to some of the those key reasons. And I don't think that'll be a big surprise to you. But one of the keys here, and it seems to be a key throughout all the global markets now, is China. The interwoven relationship with China and the U.S. is such a powerful driver, not only in the currency markets, but in all markets, especially the commodities markets. And it just goes to the the major imbalances in the world that are currently are rebalancing, but that's not the story today. And it also goes to just the massive amount of U.S. dollar debt held by China because of the way they've run their economy. They've created these massive dollar reserves because they've suppressed their currency, the yuan, against the dollar in order to drive their export economy. And so this has created the problem, and it's created a real potential problem for the U.S. Borrowing so much money from overseas, which we know, and that is a disaster scenario, and we'll get to that. Here's our standard disclaimer, and really the point is that anything I say here is not necessarily, it's not a recommendation really to do anything. We're just trying to share some ideas here today and show why that, if you look at some of these ideas, and especially the way we look at using FX options on the ISE, it's really a great product to trade these longer-term global macro views that we have. We trade in very short-term time frames also, but we use spot to do that. And I think Steve will be the first to say if you want to trade short-term intraday or a couple-day time frame, spot will be more efficient. But without a doubt, we think there's the position for this FX option product in ISE is really for the majority of the investors. The rest of us out there that don't want to be screen junkies, that don't want to trade intraday, that pay attention to the markets, that want to take a longer term or intermediate term type view, a trend type view based on the fundamentals, not just pure technicals, and let that view play out with limited risk. And if you get it right, you get a big bang. And that's the beauty of these ISE FX options. You can do it in your regular brokerage account. You don't need to open up a special Forex or futures account to do that. And there's very clear transparency. ISE, a regulated exchange, you can go in and see the prices, bid and ask at any time on your regular brokerage account screen. What we have here is just a list of the ISE options that are currently listed on the on the FX options listed on the ISE exchange. These are the 6 major currencies and the quoting conventions, and Steve will get into a little bit more of that later. First chart I have here is really the long view of the dollar, and this is when the dollar started trading. Back in 1971, actually started trading in what's called a free-floating market against the major currencies in the world. I won't go through all of the chart. I'll let you look at that. But what we have here is just the dollar index, the black line, and various global macro events that led to major bull and bear markets in the U.S. dollar. It's usually major game-changing events in the global economy that lead to these multi-year moves or multi-year legs in the dollar. Needless to say, they're not all straight up, straight down. They're many months at a time, and sometimes years of retracement in the longer-term bull market trend, which just goes to show you that even though you can have a long-term view and be right, you can always trade around that on a multi-month basis still, and maintain your longer-term view. And again, the beauty of the FX options going out to 10 months. You can trade something short term and not lose your position long term if your long term view hasn't changed. If you just see some counter moves against the long term trend, and we do that, and that's also another way we use this product, and it's a great way to do it because you're not making a huge bet and you're not risking a whole lot, and so you can look for these intermediate term opportunities. Point trying to make here, and let me grab the pen real quick, is this last phase right here. We've been the bear market in the dollar that started in 2001 right here. When the tech bubble burst in the U.S., the dollar started down in a very, very big way. And part of the reason it did that, Fed Chairman Greenspan at the time pushed interest rates down to 1% in the U.S. The U.S. lost its yield advantage in a very, very big way. He was trying to stave off, at the time, rising global deflation after the tech bubble burst in 2000 timeframe. In the process of pushing interest rates so low, they really just created a massive amount of dollar credit in the world because the investment banks use these very, very low interest rates to create all the derivative products that we know. Just to give you one example of how much the derivatives boomed to, I think back in, it was 1990, I believe, derivatives represented about 25% of global GDP. If you took the nominal value of all GDPs in the world back then, it was about 20 to 25% of global GDP combined. And I think at the end of 2007, the amount of derivatives in the world, and again, not all this is bad stuff. A lot of it is good stuff that we use in our financial system. But the amount was about 900% of global GDP, 9 times the value of global GDP did we have in derivatives, and much of that production started right in here in that 2000-2001 time frame that drove this cycle, and the dollar was used as the driver of that. The dollar, it was dollar-based credit being spread around the world, and sure enough, the dollar's been went in a massive bear market, made a new all-time low. If you're looking at the dollar index here, so we had a new low in this bear market cycle. And a lot of people are saying here that this bounce that we've seen right here in the dollar since July of 2008, is nothing more than just a bounce in a longer-term bear market trend. And really, that's what this view is about, to create this scenario to give weight to that idea that this is nothing more than a bounce in a bear market trend. We happen to think it's more, but the reality is we constantly have to be open to the other side and create scenarios that are the other side so we can see the stuff shaping up. And at the moment, the other side of the fence, dollar going back into a bear market, has a little bit of weight in here given the moves lately and given the sentiment shaping up. So that's what we're going to talk about today, is that bear market, regular bear market, and major ugliness bear market type of move that we could see in the dollar.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.